Hello, everybody, and a very warm welcome to this BrightTALK seminar on AI for preventing fraud and what does the future look like. My name is Richard Mason from Cybernetics, and I'm joined with Eric Sibony from Shift Technology and also Xavier Mira from FaceFee. We're delighted to take you through this subject, a broad-ranging one, but we're going to keep it short, sharp, and focused. We'll be very pleased to take your questions as we progress through this, and we'll cover as many as possible during the presentations. And if we can't cover those, we'll cover them at the end. Just as a reminder, this is being recorded as a webinar, as all BrightTALK events are. And the slides that we're presenting today will be made available after the presentation. So, as I said, this is a big topic, the future of AI in preventing fraud. We're going to do our best to cover that, and we're going to do it really by going through three different use cases that demonstrate the growing application of AI across fraud prevention, management, and some related areas as well. And our aim is really to use these use cases to highlight some future direction of AI as a tool within fraud prevention, and that's very much how our three companies are integrating AI into our solutions for some of the problems related with fraud and fraud prevention. But in doing so, we'll cover some key factors that are relevant to the solutions that we're seeing in the marketplace and are relevant to the future direction of fraud prevention and AI. So that's AI in the context of the technology. So that's data sets, management, analytics, computing power, and the cloud. And importantly, how people are beginning to understand and use these tools to gain the new skills they need to be more effective in fraud prevention. And also, what does this mean for organizations, including how they improve their processes, the way they operate. So let's start, and we're going to get back to the future. Oops, no, we're going to get back to the future. So everybody knows this scenario of AI and the future. Somebody very smart creates general intelligence. That general intelligence decides that those very smart people are no longer needed, and the rest is history, as they say. Now, been around for a while, this conception, but we know there's a number of factors that have got people thinking and talking about this with more earnest. Developments such as AlphaGo, the scale and the breadth of applications that are AI or claiming to be AI, combined with the pace and pervasiveness of automation, has got people focused on both the opportunity but also the threat of AI. But we know predictions are hard. We know that from technology. We know that from elections and referenda as well. So one of the ways to actually think about the future and predictions about future is to extrapolate from the reality of the technology and its usefulness as a tool in solving the problems and the factors that are likely to contribute to the success and its expansion. So if you look at those with AI and fraud, then the future looks more like this, which is about machines and people working together to be more effective in solving some of these specific problems, and importantly, with the specialist strength of AI. And that's one of the key areas to think about is where does AI operate, where does it have strength, and how does it contribute towards people being smarter and more effective in their roles. So as we look at AI as a tool, in a toolkit, and as an evolution within the toolkit, I wanted just to start by going through, very top line, a summary of some of the types of artificial intelligence and how they're being used as part of this evolution that's happening quickly in the application of systems to fraud and fraud prevention. So firstly, we have the traditional approach around rules-based approach and the use of lists to prevent fraud and detect and prevent fraud. Typically, they operate in limited data sets, so transaction analysis using conventional statistics, and also lists which are used for blockages based on reputation scores. Those could be lists from IPs, device types, or corresponding reputation score that you use to block. They're susceptible to, as we know, to false positives, and they're also susceptible to gaming by criminals. So supervised machine learning as a type of AI is being applied to multiple data sets, more data sets than traditional rules-based analysis. In the design, there are more features applied to produce better analysis using more complex patterns, using methods such as regression and classification to deliver predictions against variables that are determined by people with domain expertise. So the methodology includes using scenarios and labels, and then running that through historical data to get a much more accurate analysis of what normal and abnormal behavior looks like using a broad range of features from the transaction, the card holder, or the transaction history. It gives you a much more holistic view of the transaction behavior and enables you to detect and predict fraud and fraudulent activity with more accuracy. And then unsupervised machine learning uses methods such as clustering to actually learn relevant patterns across larger data sets, and it doesn't rely on scenarios or features designed by people. So its potential value in fraud is the ability to detect new patterns from complex data sets linked to new types of fraud from criminals, and also its ability to detect those patterns and types of fraud earlier across all types of accounts. And lastly, as a type of AI, deep learning, it combines supervised and unsupervised learning for more complex pattern recognitions, typically on larger data sets, using neural network algorithms. We know about AlphaGo and its application, but other practical uses, or perhaps more practical uses, are being developed around natural language processing and also facial recognition. So these are just a very top-line summary of the tools and how they're being applied, but how are they helping people with the prevention of fraud? So in broad terms, AI can help people do things that they can't do very well or at all. Just the sheer number of data sets that they can analyze, the insight that they can get through that. And by doing so, they also reduce human error. They provide insight at critical decision-making points. And that's, so from the practical implementation and use cases that you see in fraud, it's presenting the information at that critical point. So being able to get the information in a timely manner and present it into the point at which the person makes the decision so that they start to make smarter decisions in connection with fraud and fraud prevention. And ultimately enables more, within that process, enables more effective detection, prevention, and compliance. And for the organization, there has to be a clear cost reduction benefit in terms of the speed, simplicity, and effectiveness. And ultimately, the proposition really lies around improving the customer experience from approvals through to restrictions in blockages and also reputation. So where are we seeing fraud be extended? So the classic application is credit card transactions, and we've seen MasterCard's decision intelligence as an example of the application of extending risk assessment through by machine learning on patterns of shopping spend behavior, customer value segmentation, combined with location, time, and purchase type to improve the process and approvals. And we see that extension of machine learning in areas such as credit card fraud increasingly being extended to new anti-money laundering solutions, rather than relying on rules-based scenarios, using more complex sets of data and more accurate analysis of behavior in the context of AML. And related to that is the use of identity management security solutions with AI that are integrated into more effective uses for digital identity as well. And Xavier will cover that in his presentation. Insurance and insurance claims. Eric will discuss how Shift systems applies AI at critical decision points in the claims handling process and more. And I've included conduct here, not strictly fraud, but there's a lot of parallels and similarities between the application of machine learning into trade surveillance and conduct risk management, with a very similar model that we see developing in the AML modeling. So when I run through cybernetics, a lot of those the applications within our model are applicable to how AML monitoring is developing. And then there are a whole set of other areas where AI is being applied to enable more effective and efficient fraud management. So at the data analytics and management layer, increasingly AI is used as part of the automation technology to ingest and manage the data sets that are needed for fraud systems. And data privacy, new solutions are emerging that use AI as part of the systems to be more effective in complying with new data privacy issues, which obviously potentially becomes issues in fraud and fraud detection, particularly as you extend those into AML as well. And of course, related to that is cybersecurity and advanced analytics and machine learning being used as part of risk systems around cybersecurity. So again, just a very quick run through some areas of extension. And what we'll do now is get into the first use case, which is cybernetics. Just bear with me. Just having a little bit of problems with the presentation. There we go. Right. So cybernetics is a behavioral analytics company that's applying machine learning as part of its behavioral analytics model to the issue of trade surveillance and conduct risk. And I think what's important is that, just to reiterate, that machine learning is used as part of the overall analytics and data model. And as a company, we use supervised machine learning within our model. And our model is constructed with domain expertise around data science, clearly, behavioral science, so understanding how behavioral biases operate in the context of finance, and then domain expertise around conduct in the context of surveillance as well. And a critical part of that process is modeling the decision-making process and complexity for the problems that we're solving in connection with conduct in the context of trade surveillance. And this just is an illustration of that modeling and mapping work that we've done around the decision process within investment management, so that we can use this to start to build our features into our analytics model that link to the scenarios that we're looking for in the context of market abuse and trade surveillance more generally. And what that gives us by applying our models to a number of data sets connected with individuals and the decision is a behavioral fingerprint of individuals and how they make decisions, and where there's risk from a misconduct perspective as well. So we're able to use that analysis on much richer set of data sets that are attributable to individuals and their decisions to spot abnormal behavior much faster and with more accuracy as indicators of potential suspicious activity for market abuse or potentially rogue trading as well. So that enables us to solve one of the biggest problems around surveillance and monitoring for any type of fraud or crime, which is false positives. It also, importantly, for the compliance officer, enables them not only to get a fast and more accurate alert on potentially suspicious activity, but it enables them to break down that activity in the context of the behavior of the individual, to understand where the abnormality is, not only in the scenario, the particular type of market abuse, or that could read across for a type of fraud or money laundering, but it also enables the compliance team to understand specifically for that individual how normal and abnormal the behavior is for the individual, so that they're able to investigate with a much higher degree of an understanding of the factors that are most relevant for indicators of in this case, potential market abuse. So they can investigate and report on suspicious activity with much more speed and accuracy than using traditional rules-based analytic systems that might rely on, in this case, a trade, but in fraud might rely just on a transaction itself. So the examples of the multiple data sets in this case would be, it will be trading, as well as orders, it would be market data, it will be portfolio data, all the relevant data sets that enable the system to provide an accurate behavioral profile of the individual in a richer, more complex, accurate way, so that potential suspicious activity can be found with greater accuracy and can be investigated with more speed. And the other important thing is that with that speed, accuracy, and insight, the compliance function is able to be proactive in managing risk around conduct with the front office. And because we use because the same systems is used across the organization, management within the company have a scalable, consistent view around conduct and conduct risk that they can manage as part of their broader responsibilities as senior managers within the organization. Okay, I'm going to just move this forward and hand you over to Eric from Shift Technology, who will go through how he's using AI.
Hello everyone, and thank you, Richard, for the introduction. So at Shift Technology, we provide insurance companies with an IT solution to help them detect fraud. This solution relies on 3 pillars. The first one is mathematical modeling, because of course all the results are output by algorithms, so they involve a lot of mathematical modeling. Big data, because, well, big data and data analysis in general, but because in insurance we have large volume of data, but also quite complex data, and I will come back on this. But mostly a very specific aspect of our solution is that we integrate as most feedback from experts in insurance and in insurance fraud handling everywhere in the solution as most as we can, and I will expand on this in the presentation. So very quickly about Shift Technology. So we started with motor and home insurance 2 years ago, and then last year we extended to health insurance and travel insurance, and now we are extending this year to workers' compensation and also anti-money laundering in life insurance. We have today more than 25 clients, and we had the chance to have many opportunities in many countries in the world. So we have several clients in Europe, mostly Europe, Asia, but also in the Americas. And we also are proud that we've had some benchmarks. So benchmarks, kind of like competitions, like Kaggle, but not public, of course, about competition on real data sets, and all the competition where we were involved in, we were able to win them. Our second achievement that we're proud of is that with all the insurance companies that with which we did a pilot, we then put the solution to run in production to have a use in run, and for all them, we've had a positive ROI in less than 12 months, which is it can seem long outside the insurance industry, but inside the insurance industry, it's quite a nice success. So insurance fraud is very wide. It covers a large variety of behaviors. It can go, I will mostly use examples for motor insurance because they're the simplest, but it covers behaviors such as you have a motor accident, and in your claim statement, you will lie on circumstance, for example, in order to get covered. And this would be called like small or a simple fraud or opportunistic fraud. But it can go up to a complex scheme that can be organized by criminal rings, and it can involve fake bodily injury or money laundering. So we have a wide variety of situations. But what is really important in order to have a good detection is first to best understand what's the processing behind. Because in the end, it's not enough to detect fraud. What we want to do once it is detected, the goal is to make savings, is not to pay the claims that are fraudulent, and for this, and so to make savings. This all insurance have set a process to handle fraud, which is here depicted very schematically. So usually you will have a claim statement, so the statement sent by the policyholder that goes to the claim handler, and then the claim handler will analyze it. And if there is something suspicious, so today most of the time it will be through a manual analysis, we'll send this to the fraud handler. So it's a handler that is more specialized in fraud claims, and this fraud handler will do some investigation, sometimes involving field investigation by sending an investigator on field to have more data, and then close the investigation. So the fraud handler is really the key, the center of this process, and he must face two questions. The first one is when he receives the claim, is the claim really suspicious? Do we need to do an investigation, and do we need to spend some money to send an investigator? And then the second question in the end, is it really suspicious? Once we have all the information about the claim, is it really suspicious? And if it is, how are we going to proceed to make the savings? We like to compare this to the process or to the situation in credit card fraud, for example. In credit card fraud, you have banks that have softwares that detect if the purchases that are being made on your credit card look like the purchases that you could do, or if they are, or if they could be done by somebody who stole your card. And sometimes these softwares can cancel automatically the card if they detect something suspicious. And in this case, they can do it because if they're wrong, it's not that much of a problem. Let's say that if the software cancels a card whereas it was actually the holder of the card that was doing the purchase, well, the loss here is that only the holder of the card will just don't have his card for a few days. That's not a reason. He won't leave his bank for this reason. So it's not an error of fake positive is not too much of a problem. Here, the person we suspect is the client, so we cannot do. Fake positives are really a huge loss for us. And at the same time, we don't want to leave this to any algorithm to treat with the client. So we need this fraud handler, which is at the center of the process. But of course, these fraud handlers face several issues. The first one being the volume. Of course, there are a lot of claims to be processed in a short time, and usually they don't have all information available. So all this sets the context for the challenges of an IT solution in insurance fraud detection. which are, of course, to sort the claims according to their fraud risk by providing a suspicion score. But most importantly is to give insight about the underlying reasons for the suspicion, is to give explanations in real English, I mean in real human language, to the fraud handler as to why the claim is suspicious. So the problem is not really is the claim suspicious, but why it is suspicious. And this actually is a specific problem which involves much more. It's much more complicated from a scientific point of view, but I will come back on this. So to give just the general ideas about the data that we use, so of course, in the end, every fraud leaves footprints such as suspicious circumstances, high frequencies, curious coincidences, and the goal is to find them in the data. And we mostly use the data from insurance companies, the core data, I would say. So core data are about claims. So about a claim, what we have is the date of the claim, the circumstance, the place, who was involved in the claim, what were the vehicles, for example, what were the damage. About the insurance policy, when was the policy subscribed, what are the covers, like this, and about the clients. So as you can see, from technical point of view, these data are structured and qualitative data, and not quantitative, such as vectors like images or stuff, which involves, of course, very different algorithms, which means that we use very different algorithms to treat this kind of data from the algorithms that we would use to treat image, for example. So, of course, finding these footprints is not simple. First, because the data is complex. The data is complex, and the data also is dirty, because most of the data is entered by hand by the claim handlers when they receive the claim statement. And so there are many mistakes, many data errors. So it's not necessarily missing data, it's data errors. That for this you need to really have good models that are both statistical models, but also that integrate some business rules in some sense, or that integrate some business constraints, to be more specific, that you have to fit into your statistical models in order to be able to detect fake names, fake amounts, fake damage, not fake, but I mean values that are not correct. And so for this, we have a lot of algorithms to first clean the data. One specific algorithm that we have also is to reconstruct entities. So a central issue in detecting insurance fraud is to be able to say for a person all the claims that the person was involved in. But the thing is that at first what we have, we don't have any ID for the person, or sometimes insurance companies have IDs in their system, but the IDs are never correct. It's very, very common that a human being from the real life will have many IDs in the system. So we cannot rely on the ID, and we can only rely on personal information. But as I said, since personal information is entered by hand, there are a lot of typos or variations. And so we have to reconstruct these entities based on these personal information, taking into account these potential variations. And for this, we have developed an one and several algorithms specifically dedicated to this task, to say if two persons are the same, and even more precisely to partition the set of all the potential entities into a group of entities that correspond to the same, so typically this Peter Johnson here, to put them together. So once we have this, we still have actually complex data, because, as I said, the data that we have is really relational. We have a claim. On a claim, we have the people involved. Each person, if it is a victim, can have some bodily injury. We have the vehicle involved with the damage on the vehicle, with the people that was in the vehicle and stuff. So as you can see, the data is quite complex. And then on this, so what we do, we detect suspicious behaviors. So to come back to what I was saying, we don't just detect suspicious cases. We need to say for a case, what is the underlying behavior? So to do this, I won't enter much into the details, but the idea is that we explore the space of potential behaviors that we have defined in a very generic mathematical way. But the problem here is that we explore this based on the data that we have, so it's an exploration in a supervised mode. But the problem is that we have very few labeled cases because there are usually very few fraud that were detected in the past by insurance companies. And so for this, we use some specific algorithms that use what is called privileged supervised learning that can use more knowledge on each case, even though we don't have this knowledge at the time of prediction. I won't have to measure the details, but these are the keywords of privileged supervised learning, for instance. So with this, this is just an example of a case. So this is a complex case of, as I said, a criminal ring. This was detected in Malaysia. And in this case, I won't describe much, but we have individuals that had a lot of claims together. And so then we output this for the insurance companies, and they ultimately found out, I mean, they could find evidence that there was fake claims, and actually it was involving money laundering. And we don't know exactly what happened, but it seems that some of these persons were sentenced to jail. So this is to give just a complex example that is interesting in this sense. So just to conclude about how the solution functions, we provide a solution in a SaaS mode, so in software as a service, which mainly means that we work, it is based on data transfers. So the client transfers the data to the solution, and then the solution sends back results in a web interface. Of course, we have all the security requirements and all the regulations requirements for each client that are satisfied. So I think I've done my 15 minutes. And so that's it. Yeah, so we have today three offices in France, Singapore, and Hong Kong, and we're opening a new one in Spain. So now I'll leave the floor to Javier.
That's great. Thank you very much, Eric. And Xavier, just before we get in, we've had one question around sound and that it's gone off. And I meant to say at the beginning, if you do have some technical problems, there is a technical support option on your screen as a member of the audience. So if you wouldn't mind just putting that question through there so that the technical support team at BrightTALK can answer your question for you. Thanks very much. Okay, Xavier.
Okay, so hello everyone. My name is Javier Mira. I'm going to try to share with you some information about AI applied in facial recognition. So the idea of this presentation is to give you an introduction about FaceV, about what we do, to talk a little bit about identity fraud that we have today and how we can use artificial intelligence to fight the identity fraud, and what we think that is going to be the next steps in terms of the AI for the future. So basically speaking, FaceV is a global leader in facial recognition technology. With a strong concentration in the financial sector, our product is rapidly becoming a service used by banks all over the world. And its implementation doesn't just save money, it's also a way to attract clients and build loyalty, and at the same time increasing the security of transactions for both customer and businesses. So FaceV has entirely designed and developed its own robust algorithms and are already validated by financial institutions. So let's talk a little bit about identity fraud. So a digital identity is an online or networked identity adopted in cyberspace by an individual or an organization or an electronic device. In terms of a digital identity management, key areas of concern are security and privacy. Like its human counterpart, a digital identity is based on different characteristics, such as username and password, online search activities like electronic transactions, date of birth, social security number, medical history, or purchasing history or behavior. So digital identity is linked to one or more digital identifiers, like an email address, for example. And because identity theft is growing a lot, digital identity authentication and validation measures are critical to secure public and private sectors. Let's talk a little bit about the identity fraud in the United States. Identity fraud is defined as a non-authorized use of another person's personal information to do any action, from simply using a stolen payment card account to making a fraudulent purchase to taking control of existing accounts or opening new ones. With the massive rise of cybercrime attacks, hackers have stolen over 1 billion credentials all over the world. The U.S. Department of Justice reported that 17.6 million Americans were subject to identity theft in 2014, with 80% of cases coming through breached bank accounts and credit cards. And it doesn't stop there. In 2015, internet security firm Kaspersky reported that more than 100 banks were hacked with malware, and they estimated the total loss to be around 1 billion, making the most successful cybercrime campaign seen yet. The global cost of cybercrime annually is between 375 to 575 million. Let's talk a little bit about artificial intelligence, how it's fighting the identity fraud. The history of AI is not a long one, around 60 to 70 years, but the advances in recent years have been huge. Technology combined with the studies of the human brain help making AI a reality we can use every day. Artificial intelligence is an emerging business technology that is beginning to transform industries, including banking, financial services, manufacturing, retailing, and etc. A narrative science survey found last year that 38% of enterprises are already using AI, growing to 62% by the end of 2018. The basic premise of artificial intelligence was originally that the human intelligence, such as computer vision, visual perception, speech recognition, decision-making, and translation between languages is predictable enough that it can be simulated with computers. But in more recent years, AI has also acquired other challenges, including deep learning, big data, biometrics, machine learning, test analytics, and some others. Machine learning versus the statistical modeling. The biggest advantage of using machine learning is that these algorithms can learn from data without relying on rules previously defined. However, statistical modeling are generally applied for smaller data with less attributes, or they end up overfitting. Machine learning is a subfield of computer science and artificial intelligence, but the name suggests needs minimal human effort to find out patterns hidden in the data. It learns by examples, like humans do, automatically. It is generally applied to huge data sets. The more data you have, the more accurate your prediction is. Machine learning has never been more prevalent and accessible than it is today. It has managed to influence and boost several industries and markets. For example, retailers use it for product recommendations, email providers use it for filter spam, and so on. And cybersecurity industry is heavily investing in including machine learning in its fight against malicious actors. Actually, it's very difficult to find a vendor that is not claiming to use machine learning somehow. Okay, so how biometrics can help with that? In 2016, there were 15.4 million victims of fraud and 16 billion US dollars were stolen, according to a Javelin study. How can we reduce identity fraud? By using biometric authentications. So according to another study, 600 million devices will use biometric authentication by the end of 2021. Biometrics is coming to be understood as one of the most advanced and secure systems, not only for identity verification, but also for improving functionality, through capabilities such as facial recognition-based login. In order to make the best of biometrics, we need the most intelligent and powerful tools. So it's necessary to have the best AI and machine learning and computer vision. As you can guess, in order to be recognized by a machine, many models and algorithms have to be working precisely. These complex tasks require machine learning and computer vision techniques. For instance, in a face recognition system, there are some basic models. Mainly, an image classifier is required to detect faces. We have to analyze the parts of the input image and determine whether each of them corresponds to a human face or not. Once the face is detected, we have to normalize and align with the most advanced techniques of image processing, for example, removing glares, shadows, occlusions, etc. Then we need to extract the biometric pattern, in our case, 6 kilobytes. This is the DNA that makes unique a person. And there are several feature extraction algorithms that allow us to make that transformation of an image into a numerical sequence or code. With those biometric patterns, we can now create groups. And it's also possible to know the subject's age, gender, race, pose, etc. But what happens when the user is gaining weight, is changing his look, or aging? Patterns may become obsolete, and self-learning techniques will be needed for the biometric system to continue working properly, learning without human supervision. With all this, our identity could still be spoofed by using photographs or videos. To avoid spoofing, machine learning and deep learning techniques should be used to discriminate when a user is not in front of the camera. In addition, we also apply alternative factors that enhance the security, like, for example, voice recognition and collaborative challenge responses, such as saying a random sequence of numbers or blinking at a specific time during the authentication process. Another scenario that we can use artificial intelligence with the facial recognition is our technology for digital onboarding. According to the European Central Bank, the most commonly fake documents in Europe are national identity cards. It's a challenge to find effective methods to verify documents, and especially when more and more we use our devices to open accounts without going to branch offices, just with our cell phone. The online onboarding process uses complex artificial intelligence technology, although for the end user is simple and fast. The user enters his email address and telephone number, then he takes an automatic photo of the front and the back of the identity document, and then he takes a selfie that also includes a liveness test, adding an extra level of security to the biometric test. Then all the security tests are also performed automatically without the user cooperation, such as geolocation of the user, typographical test, verification of the identity document, social network verification by using email or telephone number, and along, etc. Another scenario that we try to use is a frictionless e-banking or home banking, but also the ATM to reduce the fraud. On April 8th, FICO Card Alert Service noted that its fraud tracking service recorded a 546% increase in ATM skimming attacks from 2014 to 2015. So this is a quite impressive number. These figures are fought with artificial intelligence techniques. As QR codes are shown in the ATM screen or in the browser to read them with the mobile, we avoid the use of credit cards or typing the passwords, and also we add security with a biometric system as an alternative to the PIN number. So that means a frictionless experience, accessing to your e-banking without passwords. With the new QR and facial recognition accesses, you can avoid identity fraud and phishing, making it optimal for the banking sector. Some of the use cases that we have. Summarizing, FaceV is leader in the banking sector with 12 banks using already our facial recognition. We had about 9 million authentications in 2015. We closed 2016 with more than 60 million authentications. And we forecast for this year about 130 million authentications by the end of this year. The result of this technology applied in the financial sector is that we have 100% of client satisfaction so far, and no fraud has been reported. So banks and financial institutions are completely open to start using facial recognition, including artificial intelligence. And last but not least is how we see the future for artificial intelligence linked to biometrics. In FaceV, we work with the digital authentications to be more secure and intelligent, as well as convenience for the users. And we think that the next digital authentication processes must be completely passive, which means that users should not collaborate with the process, which means users should not be asked to put the finger in a sensor, not the face in front of the camera, and not to repeat any numerical sequence, etc. The software will know at any moment if the person which is operating is authorized to use the service. In this sense, the software would use all the sensors available: camera, touch screen, microphone, etc. Of course, to simplify the activities, it's going to be necessary to enhance the standardization and globalization of global digital identities, as GSMA Mobile Connect proposes. As these improvements will be taking place, more and more sectors will demand these services: finance, fintech, insurance companies, payments, platforms, retail, and along, etc. And that's all from my side. Thank you very much.
Thank you very much, Savio, and thank you, Eric. Fantastic presentations, which got into the detail of exactly how AI is being integrated into your systems and providing radically more effective solutions for some of the problems with fraud prevention and management for organisations as well. So our last slide, I just want to pick up on the point that Xavier made, which is, let's look at the future. It's hard to predict the future, but as Xavier already indicated in his last point, the application of his solution is being extended across multiple industries and use cases. Eric made that point too in terms of the scope of the claims handling solution that he provides as well, and we see that with the extension of the same kind of core models, technologies, scope of data sets from structured data to more big data sets in other applications of monitoring and detection of fraud, financial crime, suspicious activity generally. So there's no doubt we're at an exciting point in this journey, but what will the future look like? Well, the future, like most things, will be shaped by people, and it will be shaped by people with the machines and with machine learning. And they will play a role in that, but there are a number of factors that are critical to the expansion, development, and testing, and validation of these types of applications. Fundamentally, we've heard that from all of our presenters. It's around the data sets, and actually applying AI as part of the solution and to that problem. Clearly, it's the analytics and the technical development of the analytics and proofs around the different types and extension of analytics, but also understanding how you apply, where and how you apply the different types of machine learning techniques and their effectiveness as specialized tools. Huge driver is just computing power, especially as you get into deep areas around deep learning, and the ability to have distributed computing power on the cloud. Huge potential, but ultimately it's about the adoption by people, and for that there's clearly some opportunities and issues around skills. So there's the skills around understanding and the models and the applications and all the governance and risk around that. And it's also, there's no doubt that the applications that you're seeing and will see will change people's roles. I think if you look at the reality, there's it's in a very positive way that change, as all automation has throughout history. But it's understanding that for people themselves and organisations and harnessing that in a positive way is critical. And as we go through these use cases, we see concrete examples of how we help people to automate and get insights that they cannot get, so they can be more effective and actually more productive and more rewarding in their roles. And obviously the operating model, so not just what does that mean for organisation in terms of how they think about just the technology, but its impact on people and processes. But I think the key area that this webinar illustrates is a mode of the need for a mode of collaboration. So yes, organisations can be aware and understand the applications of machine learning in systems, but increasingly it's external companies that are driving those systems applications and extending those into areas where it really makes sense for industries to collaborate in these new approaches, to evaluate them. Very often in the context of regulation and supervision as well, to actually accelerate understand them and accelerate the benefits of that. So that model of collaboration is incredibly important, and also, as I said, that links into what could happen at a macro level around standards around data, consistency around regulation as well, from requirements within financial regulation and data privacy and security, and also digital regulation as well, enabling regulators where it's relevant to the application of solutions to work in a different model. And we're seeing more broadly across institutions, members groups, and actually regulators, the acknowledgement that collaboration around these issues is going to be vitally important to accelerate the impact of different types of AI in the context of these new systems and these new models of collaboration. So with that, I'll say thank you again for the presentations. We're going to ask some questions, and the questions that we've had in, first one is, why aren't banks using machine learning more? And I'm going to extend that. I'll deal with banks, but and Eric and Xavier will do that. But let's maybe extend that and say, why aren't organisations, large organisations or institutions, using machine learning more? And Eric, I wonder whether you would like to have a go at answering that one.
I mean, I wouldn't know for banks. I could say for insurance companies. I think in practice, in industry, before doing machine learning, what's most difficult is to have the framework to be able to first, for example, assess if an algorithm is good, because usually you want when you like study machine learning in school or when you apply in a project, you will have a fixed data set and that's it. But when you want to make it work in practice, you want to follow the success rate of the algorithm through days, and for this, usually you need a lot of, a good data framework to be able to have a good monitoring of stuff. And from our experience, it's usually not easy for such big companies as insurance companies that have a very heavy IT system to put in place a flexible framework where you can iterate and try different new kinds of algorithms. This would be my answer for insurance.
Yeah, absolutely. And I think, Eric, that's the same for banks. The challenge around the data sets, the ability to extract, manage the data quality issues that you talked about, are all challenges for any institution in terms of being able to get the right data sets in the right order in order to run through any analytics system, including analytics systems with AI as part of that. Xavier, what's your perspective if we think more broadly about organizations and how they can use more machine learning?
Well, from my point of view, that it's more related to banks, that it's actually the question. I would say that they like to start using more and more the machine learning technologies, but I think what they are doing is so far using some fintech companies or some other companies that are providing software, including machine learning and artificial intelligence, and analyzing these companies and implementing those technologies into today's financial sector that is changing completely in terms of interaction with the clients. But I think it's a long way in front of the big banks in order to change this, because as you already mentioned, the IT departments are not probably the more sophisticated today, and they are using external technologies to start trying these technologies. So I think they will change in the future, but we'll see.
That's great. So thank you. And the only thing I'd add on that question is I think financial services companies, if I think about investment firms, they have been using some very advanced analytics and machine learning in their trading and trading strategies in the front office. You see the adoption of robo-advice with varying degrees of sophistication in terms of machine learning. Again, in the front office, I think what we're seeing, what's happening is and you see that in the middle office with risk, right, and the risk modelling systems and the management that's been driven by the need to respond to global regulation. What's happening is the back office functions and now need the kind of transformation that you've seen in more the front office systems. And so, don't like labels and categories, but reg, risk tech, fraud, crime. These are all areas where third-party companies are coming together with solutions that are really transformative, and it's awareness. There's real practical problems, particularly around just the cost and time in complying with regulation, just to get data sets to comply with regulations. And we should, it's great talking through this, but that's a real challenge, and that's really it's a real front of mind issue for people in the back office. And the good news is, though, is that those granular data sets that they're having to produce are all the sorts of level of data sets that you need to actually be optimized by these kind of analytical models, which include machine learning. So there's no doubt, and we get this from the company, banks and institutions that we talk to, is if you look at MiFID II, for example, in Europe, and you look at the granular level of detail that's required under that, that's exactly the granular level of data sets that can drive through our analytics engine to give, not only to take the cost and be more effective, but actually create more business value as well for them in terms of looking at insight around investment performance. And so I think there's a value proposition, but the key to that, to actual implementation, will be this collaboration, and it's collaboration with companies that are developing these solutions, and increasingly in some of the regulatory area, it's collaboration across banks, because these are areas of non-competition. So I think the groundwork is there, and we'll see it. We just need to work through it as an industry. We've got 1 minute. I've got one quick question, which is why data volume would be suitable for AI machine learning to work. So what data volume? Okay, I'm just conscious this is about to end in 30 seconds. Quick answer is I think it depends on the machine learning. It depends, I think, on whether the type of machine learning, whether that's supervised or unsupervised. And because when it's supervised, it tends to be aligned to around specific problems you're trying to solve as well. So I think that's the answer. Eric and Xavier?
Yeah, it's a very generic question, hard to answer in general.
Okay.
Absolutely, absolutely.
Okay, great. That's it. We're finished. Thank you very much, everybody. Thank you very much, Eric and Xavier. We will upload the presentation PDF. You'll be able to get that. Thank you for everybody's questions and your feedback. And have a great rest of the day. Bye-bye.
Thank you. Bye.